Hi, this is Dave Adams with a review of Decision Bar software. I was reading in a trading forum the other day, and some people were unhappy with their entries and exits on this program, and I felt a little embarrassed, to be honest with you, because I use it an awful lot, and I've had great luck with it. But I don't use it as a primary indicator. I use it as a confirmation, and it gives me a great snapshot, really, of what's going on in the market. And so, for that reason, I guess, maybe some of the criticisms were founded and legitimate, but I find an awful lot when I talk to people about trading that they're looking for the holy grail or the one magic program that's going to revolutionize their trading. And what most people really need to do is develop a trading style that works for them, and usually that style is acquired through knowledge and experience, and you're just making a lot of trades and looking at a lot of charts. Decision bar program is pretty simple, really. It's got it charts dynamic support and resistance, and by that I mean that it's generally charting, previous highs, previous lows, and things like that. And that's a great thing to have, because a lot of times, as a trader, we're constantly penciling in lines of support and lines of resistance, and it's hard to. By the end of the day, you got lines going everywhere. And I really like the idea that the support and resistance are dynamic in this, and they're charted as you go. One easy application for this is simply that when the lines are close together, like they are right here, you know that the trading's in a very congested mode, and it's tough to trade. On the other hand, eventually the market becomes uncongested, and begins either a breakout or a breakdown, and this program gives a great view of those breakouts. One thing I don't like and don't use very often are the counter trend trades, or the usually but not always indicated by price exhaustion or failures. Uh, if you read any of my blog at http emini/WordPress, you'll see that the bane of my trading is counter trend trades. I try to avoid them at all cost. They are consistently tough trades to make much money in, and they're hard to exit. They're just awfully tricky. So for that reason, mostly I trade the breakouts and the breakdowns on Decision Bar, and I've had great luck with that. And you will too. It's really simple. A really simple way to trade. Uh, on the other hand, the failures and the exhaustions are harder to trade. I don't necessarily use signals from Decision Bar exclusively. Again, if you've seen some of my videos, I use the CCI and MACD, and I use Decision Bar. Obviously, alerts me to a potential trade. I look at my other indicators for confirmation, or I may look at the CCI and then look at Decision Bar for confirmation. Obviously, you're going to try to stay out of trades that are less productive. And again, I can't emphasize enough: trying to buck the trend is a really tough way to make a living. There is money to be made in them. Sometimes your biggest gainers can come from counter trend trades, but the truth is, day in day out, they're backbreakers, and that's one nice thing about this particular program. Obviously, you can see, when you're in the trend and when you're not. Personally, I like to snap a 89 period simple moving average across my main chart, and when the price action is below the 89 period simple moving average, I usually concentrate on short trades, and and the corollary argument is that the price action is above the 89 period simple moving average, I concentrate on long trades. That keeps you in the trend. Um, this program, obviously, when you see price exhaustion or price failure, short or long, it's not necessarily that you can't take it, but it's a good indicator to me that you're bucking the trend, and it's best to really try to avoid those trades. And it's not to say I've never taken them. I have, and I will again. But I'm usually mad at myself at the end of the day for 2 or 3 losers that were counter trend trades. A decision bar also comes with a momentum oscillator. It's basically a momentum oscillator. Another good strategy is to only take long trades when this oscillator is above uh, the zero line, and take short trades when it's below that line. Again, you'll find yourself staying out of tough trades with that simple filtering device. Again, I posted an article yesterday on my blog about average true range. If you're not using average true range, you might consider it. It's absolutely wonderful for learning how to set your stops carefully and getting the maximum potential out of your trades. Again, you can see all this at my blog. It's at eminimaven.com, WordPress. I trade a lot using fractals, so I call myself the Fractal Futures Trader. I invite you to stop by and have a look. I hope you have a great day, and good luck trading.